Okay, today is the first, and just yesterday I made a video on the Boeing, and I showed you that it was working in my favor, that Boeing was going up. So I decided to make this video this morning to show you what it looks like when the short actually starts working in your favor and the long goes against you. It's totally fine that the long is going against me as long as it don't, of course, doesn't drop too much, because now I can just buy this back for $92.50 cheaper than I sold it for, now $95. So I can actually buy this back, close in the profits. But remember, the original trade on this was on the 24th, and it was for $1,100, $1,120. So the most that I'm going to make when I let this expire all the way, if Boeing does not go up to 205, will be the $1,120. And if we remember, the long was bought at $95.70. So we would take 1120 divided by the 9,570, and this gives us the 11.7% return. Now, in the last week or so, I can show you over in the account statements on Boeing alone what I've done all of this. And this is 95. This is the original bought, and this is the short that I sold, bought back for almost 125 in profit, and then sold it again at a 205 strike price for 1,000, bought it back for 810. That's a $200 profit, and then here we are today for 1120. So I want to kind of show you. We would do the 875, subtract 750 is the 125, and then up here is the $90, or the 190, plus 190 plus is the 315. So let's just take this to the 1120, and that gives us 1435. So 1435 gives us now a 15% return. So I added on 3 to 4 points, or 3 to 4% extra, just by buying these back real quick on these dips within the contract period. So just take a look at what I'm doing here, and understand that you can actually buy these contracts multiple times throughout this trading period. It doesn't have to go all the way to expiration, but any time that I usually take 50% profit. So that means when we go back over to the position, when this thing reaches down to around the 6 to 7 range, I'm going to be buying it back, and I'm just going to do it all over again. I may wait a day or two until Boeing goes back up, so I get a higher premium and a much lower strike price that I can actually short. We can see now the 190, 192, all these are trading for $1,100, $1,200. So it's pretty good premiums now. We see that we're up in the 60s and 70s in implied volatility. And I want to correct myself, or kind of go into regarding the comment that I made in the other video about letting this thing expire and just washing it away, taking in the premium, and then buying it back. If Boeing shoots up to 210, 220, 230, 240 range, depending on what I could close this short out, if it's not too much, then I might consider just taking the loss on the short and then keeping my long position, and then just getting some better premiums in the higher. Because what can happen, you can actually take the width of the next 110, and for instance the 110 for 220, 230, 240, and do the math there, plus the premium, it might be worth it. So it's all about how much you're willing to spend, how long you're willing to be in a position, how much capital you have, etc., etc. Just remember, this position alone is tying up $9,500 some dollars in case, because I've already bought it. Now it's just up to me to make the money back in return. So just keep that in mind as well. I wanted to add that. I was thinking about it, and today when I was thinking about how to make this video, I wanted to remind myself to tell you guys that the strike price on the upside, if you want to close this short out and keep your position, then by all means you probably should, if it's worth it. You just have to do the math on that. So anyways, we can see that it's working $62 on the short side, $5.62 now that Boeing has dropped $1.20 today. Not a major, really a major drop. If this thing drops down to the 170s and I get to pick up anywhere from $600 to $700, I more than likely will go ahead and buy that back, pick up the $600 and $700 profit, and then depending on what I'm seeing on my charts for Boeing, which is pretty much trading sideways up until earnings next month, or actually this month on the 22nd, depending on what I'm seeing and hearing, I'm going to stay watching that long to see if I should just get out of it and go ahead and go from there. But I don't think Boeing's going to drop too much. I keep saying that it is a government-backed stock, asset, brand. They're not going to go anywhere. They always get bailed out, and commercial flights are definitely a need around the world. With this COVID crisis, it is hard to tell how much of a hit it will take for the time being, but you and I both know that the travel industry will always still be in existence. So that's it for this video. I wanted to wrap up this series on Boeing and how I've handled the position so far. I may make one more video for you guys, and I'll add that when I choose to close both of these positions or this long position. And until then, I'll see you next time.